Hey guys, welcome to another video brought to you by Total Control Traders. Without delay, let's get into the exciting market. Congrats, bulls. Congrats to those who remain bulls or have re-entered bulls. The trend has now confirmed change on all three bull confidence that we're looking for: 30-minute reversal, hourly reversal, and now 4-hour reversal, all confirmed. Note that we are extended, a little bit extended on the 4 hours, but this is the confirmation that we're looking for. Now let's go to the longer time frame. It's going to be a little bit harder to see because there's all these drawings from before. We are forming a hammer candle, just complete inverse from the sell-off from early last week into earlier this week. Drop down below the weekly 8. Just so slightly, and now we are pulling that weekly 8 up. So confirmed touch, weekly bull flag, and we will continue to look bullish. Ultimate target remains at 4,040.90. We never came back down to this most ideal entry that we're looking at, the GP from this last run, but we did come down to the 0.5, so that is good enough. All right, let's clean this chart up as we go, because now a lot of it has either played out or doesn't matter as much anymore. So inverse head and shoulders was a potential pattern. Descending megaphone is now the one that I'm looking at. Inverse head and shoulders already broken bull. Neckline has been broken, so now we got the confirmation. However, I am looking at further confirmation, again, based off this descending megaphone pattern. Let's say if we were to go from the wedge to the wedge, that is about 3.4%. Differently using the low of the wick, because essentially you want to be looking at the wedge. So let's say 3.4%. And now that we've gotten the break, let's see if we can do this. There we go. 3.4 would be roughly right at that 4,040.10 mark. That is the minimum that we're looking for, and that is lines up with the 4,000 psychological resistance. Now, a lot of lessons learned on this consolidation, because generally as a full-time day trader, what I used to do is when anticipating a consolidation, I would exit all of my bull positions. However, I'm recently testing out new trading strategies, and this will be likely the last test that I'm looking to do. So the strategy is to do longer dated options. I mean, now I'm thinking about it, is probably not most ideal because most of the entries were from back here or down here. So, you know, given how far we've ran from the low of November already, even back here, these two entries, even though they look ideal on the weekly, over the long term, I don't think they're too ideal. So upon the anticipation of next pullback, especially after learning from this pullback, we'll likely revert back to exiting all bull positions. Look for a better entry somewhere. Oh yeah, these two, or even entries from here, not ideal, right? We'll be looking for more of a pullback before actually re-entering these longer positions. So a change of game plan from experience of this pullback. Although that this pullback was anticipated as a weekly bull flag, and that we are seeing follow through now, the pullback that was experienced on my account was less than ideal or more than anticipated regardless. So that brings me to the conclusion that upon the next anticipation of a pullback, even though they're long leap year calls, will likely take profit. There's no point in, I'm looking at the charts every day. I might keep one or two just to continue testing out these leap year option calls, see how they actually work out, so I get some experience in that. But other than that, I have too many positions in leap calls right now. So anyways, bounce from the 0.5, megaphone is what I'm looking at following through. Okay, after hours we are still trending up, but we are getting extended, especially on the hourly. Well, hourly is actually catching up fairly decently. Strong bull flag, and now I imagine that we should reject. There's no divergences yet, so this has room to continue to run. 4 hours. Now if you look at the longer time frame, ignore the white lines, just look at the yellow lines. Okay, there's potential for a channel that we've been in, except for this last breakdown. And aside from that, you could also say that there's a wedge that we've been forming, something like that. So regardless, they are both ascending. That brings me to my anticipation of this being one of the last bull runs, and on the next pullback we'll be anticipating a much longer consolidation, a very dragged out one. And all leading indicators that we're looking at, we usually look at on Market Deep Dive, also leads me to that conclusion. So upon the reach of 4,000 and 4090, we'll likely be exiting most bull positions. But let's ride it while we can, eh? So like Diha said, protect that capital, but participate. And as my saying always goes, play with the trend until it ends. Make that easy money. Trend is still bullish, even though this last pullback has scared a lot of bulls, and myself included, because this 0.5, I was looking at this as ideal to hold to continue strong bullish trend. I mean, lowest that we can go is GP, never hit it. But even at the 0.5, my account balance was already lower than anticipated. So lesson learned. All right, let's get into the hottest tickers. BTC. Oh, I was wondering where my drawing went. BTC, weekly divergence still playing out. Daily, weekly, whichever you want to call it. If you are seeing this from a daily standpoint, know that the correction is going to take days to play out. If you're seeing this from the weekly standpoint, which you can also call it weekly, know that it'll take weeks to play out. Regardless, personal anticipation, I would be looking at a dragged out consolidation because we are extended on the weekly. So far, it's actually looking like a weekly bull flag that's setting up, because we're not breaking down all that fast. There's been some bounces to bring us back up. Could very well be a weekly bull flag. Then on the next leg up, we could potentially negate the bear divergence. Weekly 8 is your guide. If we lose it, it'll go into a longer consolidation. Next, NVIDIA. Nice. Weekly bull flag, now back intact. Daily, not so great, but look at that increasing volume. And after the hours, we are trading down. Earnings came out after hours. And as I've said before, don't ever trust that first reaction. If we were to zoom in into the extended hours, earnings 2 o'clock, first reaction bullish. Was it a beat? That was a miss. Let's take a look. Where was it? News. Sorry, been a long day. So revenue was a beat. Earnings per share was a beat. Revenue growth has been up for over 100%. Gross margin on par. So not big of a beat enough, I guess. That's why That's why you don't really want to play the news. You play the reaction to the news. I know that saying is kind of confusing because technically this is the reaction to the news, but regardless, you play the reaction to that reaction. The first reaction was bullish. Now we are seeing a sell-off. Now from here, I'm anticipating this to be a buying opportunity for a couple of reasons. First, the chart has been trending finally reversed with huge lower wicks, increasing bull volume. Second, because the chart has been in such a long sideways consolidation, sideways action on this breakout, even though it was a breakout fake out, from here, I anticipate that this continues to go up. At the very minimal, a touch of this rising trend line. So let's keep a close eye on it. Decided not to add to the position today because of earnings coming up, but we'll likely be keeping a very close eye, top watch tomorrow. Next, PLTR. All right, a lot of people are getting scared on PLTR positions now. No, from experience, I think that gives a great opportunity for buying. People lose sight of why we entered in the first place. Now, remember, we entered based off this one-to-one extension bounce plus trend line somewhat holding, depending on how you look at it. So let's say, come on. Now let's say we use it here. Nope, that wouldn't work. Anyways, somewhere around there. But remember, we entered based off these two highest bull volume ever on the daily. Ever. Okay, we entered based off these two. So if you're entering based off of the daily charts, make sure to check the daily charts if you're getting scared from this drop and then bounce and then lack of follow through. So on the daily, there is no bear volume. Compare them. You know, it's only a third of the bull volumes times 2. That's what we're seeing today. So take this opportunity as an ad, which I did. We'll be looking for follow through by the end of the week. You know, the earlier the better, of course. But tomorrow, keep an eye on it. You're gonna want to see the volume come in. Right now, I think this is perfect. Let's if you actually look at it, 4 hours. Look at this. Amazing bull divergence. Let's draw it out. Strong bull divergence. You know, take it as an opportunity. You're getting a second chance to buy in at this lower prices. Heck yeah. All right, let's move on. Next, FSR. Congrats, FSR bulls. Funny enough, I sold the shorter term calls yesterday to reduce exposure due to the uncertainty in the market yesterday, because I wanted for the 0.5 fib retracement on SPX to hold. So, and it was looking like it might just reverse. Anyways, regardless, funny enough, sold yesterday, and look at today, another new record bull volume. Did we reject? We rejected right at that area, eh? Ever so slightly new all-time highs on craziest bull volume ever. This chart is gonna give us further upside. However, before then, earnings is coming up tomorrow. That could potentially ruin the run. I don't imagine to completely ruining. If anything, we might come all the way back down to here, this key zone. But there's a chance for it. So, you know, if you have chance to take profits, especially if you're playing shorter dated options, make sure to take some profits off before going into known events, because your IV, your implied volatility, will be so jacked up that even on a flat movement, you're gonna see somewhere around, like, you know, depending on what calls you're in, somewhere around 30% to 70% drop on the flat price action. Regardless, FSR looking bullish. tomorrow will be the telltale sign. Next, QS. I don't know if you guys can tell, but I feel like I'm getting in the groove recording these videos now. It's feeling a lot more comfortable with presenting to you guys now. Anyways, QS. Something is going on. Big upper wicks. I haven't looked at this chart for some time. Big upper wicks. Didn't even come up to touch the 0.382 yet. Volume seems to be falling off. Huge volume spikes based, well, partially due to news, but this one wasn't news, and it was still a huge bull volume spike. However, now we're getting, okay, no, that's consolidation date, so that doesn't count. Let's see that follow through tomorrow. We want to see a hold of the zone, as we saw from yesterday. Closing, so the low of 55.46 is must hold. Most ideal to hold. Right, next, Zoom. Lack of follow through today. Gonna have to see what happens tomorrow. Earnings on next Monday. So there is a chance that we just see sideways action from here into earnings. Indecisiveness. Earnings will likely dictate the direction. Next. Alright, that's it for hot tickers. The next up are the, let's go through the requested tickers first, and then we'll get to the top tickers. First one, CCIV. Is this right? For some reason I feel like it might not be the right one. CCIV, yeah, that's right. All right, CCIV. Let's take a look. Not quite there yet. So if we were to draw a zone, if we were to draw a zone, this would be where I'd be looking at. How far have we pulled back? It's a decent area for entry, but we did lose that GP. So, not ideal. We are extended from the 88. There is going to be a bounce. There is going to be a bounce play. But looking at this chart, big, you can't even call this bull volume because it's a tug of war that essentially the next day bears won. After a huge gap down, we're seeing continued sell-off. This is a play that you want to be late to if you're looking for that bounce play. On the daily, we're not oversold. On the 4 hours, we're not oversold. Actually, let's do this. Not oversold. Hourly, we are. There is no bear divergences. 30-minute, there is a bear divergence. Bull volume is starting to come in. 15-minute, still no divergence. So for this kind of play, my recommendation, you want everything to line up, or else you'd be just catching a falling knife. You want everything to line up in the sense that you start seeing, there's two types of ways you can play this. Either you start seeing a base, like we saw on GME, or you want the shorter time frames at the very minimal, 30-minute, hourly, 30-minute, as well as the hourly, to give you a bull divergence to play that bounce. Because this from here could just continue to grind down. You can see on the hourly, there is still no significant bull volume. Okay, next, TLRY. You know what? We're going to group the marijuana sectors together. All right, TLRY. I think we reviewed this yesterday. No, we did not. I can't get used to this dot. Can I move this? Nope. Okay. Right, TLRY ultimately still looking up at that 0.382 as a bounce. Volume is not ideal today. What? That's interesting. How come the 8 hours shows different volume? Anyways, volume is not ideal today. After hours, we're up a little bit, 3%, right at that daily 8. Now, if you were to play, as mentioned in the yesterday's video, if you were to play TLRY, my recommendation is to play APHA instead, because of their merger and TLRY price still being up higher than APHA, it just makes more sense to play APHA. And congrats, Wing, on your APHA win that continues to pay. So yeah, between the two, I recommend playing APHA. There seems to be some weakness in it still. Let's take a look at APHA. APHA. You can see that APHA is already trading over the daily 8. Volume still not really ideal. We are right at that GP from this last drop. Tomorrow, gonna want to see that volume come through and break us over, extend us away from that daily 8. After hours, not up as much, 1%. 0.382 is at 21.33. Overall chart, APHA looks stronger. CGC, I believe, is the weakest. Yeah. So CGC is the weakest of the three that we normally look at. Partially due to their filing of, I think it was 2.5 billion offering that they can basically process anytime, I think it was. Again, not a fundamental expert, but chart based, even purely based on chart, you can see lack of bull volume. So between the three, APHA still the strongest. All right, next is AMC. We're gonna do on the Wall Street bets. So ARKK. No. So ARKK, huge bull volume came in to save the day yesterday. My goodness. Biggest bull volume ever. Decent bear volume today, unable to push it down. Let's see where we bounce from. It's actually a pretty ideal zone that we bounce from. Yeah, it is a pretty ideal zone. And then if we were to draw a second zone, we're trading right on the top of it. So on the volume, I would anticipate further upside. But at this point, you might as well wait for the break because it's so close anyways. You see after hours we're down a little bit. You might as well wait for the break because right now, even with the lower wick, the bounce from ideal zone, we could start slowly grinding sideways or downwards as we drag the daily 8 along coming down to meet. So wait for the break. That gives a little bit more confidence. It's not that far away. The zone upper end is 138.62. We're trading at 137, so about $1 away. But yeah, ARK, I think there's a chance for a bounce. Let's do AMC anyways. Actually, no, sorry, RCL. Royal Caribbean Corp. Looks stronger than CCL. Yeah, close near that high of day. This is awesome. 46% run in 7 trading days. We are getting extended from that daily 8 already. And the run continued after a earnings miss. Now let's see where the extended target looks like. I'm thinking we're near that 1-to-1 already. Yep, right near that 1-to-1. If we were to continue to see bull price action tomorrow, which judging by the close we should, I imagine that there will be a rejection, a hard rejection off of 100. Initial hard rejection off of 100, then from there, potential of forming a bull flag. You're going to want to see where the rejection takes you. If it's a hard rejection, then that's a red flag. But vaccine play, they seem to be all running lately. That's it for the requested tickers. Next up are top tickers. Tesla. Congrats, Tesla bulls. Congrats, Cathie Wood. All right, follow through today from the bounce. I cannot find why we bounced from there. Maybe I missed something, but let's take another look. Yeah, I still wouldn't call that a key zone, but that's where we bounced from. So let's keep it on the chart. Could come in handy. This is bugging me. I really want to find out why. The only reason I can see is this. Rejection, support, support, support. Does it line up with back here? A little bit, yeah. Okay, so maybe. But yeah. This zone obviously doesn't matter anymore. So from here, we are looking up at the touch of daily 8, which will be around that 0.5 area, as well as previous support zone. Bull volumes falling off a little bit, but remember yesterday it was a bounce, so it makes sense to see higher bull volume. Essentially, we cannot really say that this is gonna continue to bounce because we're not seeing that increasing bull volume. Tomorrow we could see a rejection, but we are getting to that planned bounce target of roughly around 750 to 758. Next, Amazon. Lack of follow through today. Good thing that we didn't get in yesterday. I think Cathie Wood started buying Amazon. Someone started buying Amazon. Decent bull volume, but lack of follow through. Another red flag. Lower wicks, that's okay. But yeah, don't really like it. Next, AAL. Damn, still not 52 week high yet, hey? I guess the first one to get over is 2280. Almost there. Congrats, AL bulls. We see the continuation. Slight concern, we're getting a little bit, starting to get a little bit extended on the daily. Gonna want to see that follow through on this. Yeah, since we broke the previous high, we're gonna want to see that follow through tomorrow. Bring us more extended before the pullback. Next, ABNB. All right, so as we anticipated, it's not confirmed yet, and earnings will likely dictate it tomorrow. This was a good zone to bounce from, but part of the reason, or the main reason why I decided not to play this, was because of the potential head and shoulders setup, as well as the run that we have had and the break, how much we broke under the weekly 8. So from here, it's still an ideal long-term play, But I want to give it more time. I want to see more price action. I don't want to see this head and shoulders. Maybe I do because I'm not in. But anyways, if the head and shoulders does play out, we'll be looking for an entry around the GP. And there's two ways to draw the GP. Always run it from the bottom to the top. Or in this case, this is a more clear trend to me. Versus here, there's a big sell-off. This is a clear trend. That's why there's this fib here as well. Both could come into play. So the way to play this would be first entry around there. Not as light as my normal first entries. Then from there, heavier on this one. But let's see how this plays out. All right, next. That's it for the top watches. Next are the Wall Street bets. GME. Congrats, GME bulls. Look at this. And thank you, Steve, for calling it out, messaging me about it. Let's look at this. And I think DHA tagged me as well. So thank you, DHA. A message came in at this candle. Ever so slightly increasing bull volume candle. But if we were to zoom in and disregard those big volume candles, it becomes a lot more noticeable because we were looking at it at this time. Or was it this time? 49, 51. I think it was actually this candle. One of these two. Yeah, before the actual big bull volume came in. Either one of these two or one of these two. But regardless, you can see the increasing bull volume. And I've been eyeing this chart just sort of when I think about it, but it's not on my top watch. So last time I reviewed it, mentioned that I really like how we're basing out right here. 35. Yeah, basing out in this previous high zone before that last squeeze. And today, we started seeing volume come in. And towards the end of day, it just really started popping. So congrats, GME bulls. Now look at this. Squeeze number 2. We are already in that gap fill territory after hours. Where's my after hours? There we go. We are already in that gap fill territory. Rejected right under 200 after hours. Oh, never mind. We already filled the gap. There's another gap up here. $213. Slight, ever so slightly sideways action. This after hour volume. Check it out. After hour volume, 2 o'clock, 2:30. Matches the end of day volume. That is crazy. Strong bull flag. Didn't even wait for the 30-minute 8. Now we're continuing already. Jesus. So thanks to DHA and Steve's call out, was able to get in and sold half the position at 100%. Rest of them, YOLO. Let's see what happens. Congrats, GME bulls. Now this also brings should mention something. It's because of this move, this squeeze yet again, be a little bit cautious on your other bull positions. We could see similar scenario again, which I don't really think so, because now that we already know what happened last time, could see the rest of the market pull back. Right, next, HE. Someone must be walking the dog. My dog is barking. All right, next one, HE. Nice base. Previous resistance. Support, support. Volume is not nice. Breaking down under. Did not make a higher high. So watch and see if it makes a higher low. And this zone, you can see it actually makes perfect sense to hold this GP. Previous resistance and support. So you want to hold this GP at the very lowest. This key zone. Backtest this key zone before a breakout. That would make sense. So this is a good setup here. Volume not ideal, but consider playing this. Personally, probably wouldn't be touching it. Volatility looks great for day trading. Yeah, it just depends on what kind of trader you are. Next is went through AMC and G. Wait, did we go through? No, we didn't. AMC. Increasing bull volume. 0.382 coming up. A little bit of an upper wick forming. And gap fill right at that 0.5. Anticipation would be a fill of the gap to that 0.5 before rejection. Earnings is, you still got time. So with this, we are rejecting from this previous rejection, but would anticipate further upside. Notable bull volume coming in. Anticipate a gap fill. Next, NG. Descending channel. Oh, we reviewed this yesterday. And looking like it's setting a higher low. Gonna want to see that follow through over the next few trading days. Next, CPI. Interesting chart. 27, very notable key zone. If you're looking to play this, there's a chance that we come back to touch 27 again. That would be a dream entry. 2702. Yeah. Let's do a, I'm seeing a zone here. 27. And there's a slight gap. So easy stop. If you get the entry of 27, stop right underneath because there is lack of support all the way until about, oh, it's not even that big of a price difference. 26.84. Well, I just noticed. I haven't seen one of these charts in a long time. This doesn't move that much. So even if you were to get a big move, percentage wise, not going to be a whole lot. Since pandemic bounce to the highest point, the highest of the bounce is only 11%. Yeah. Doesn't look interesting for me. As a day trader, at least, you know, it could be a steady portfolio hold. Next, TV. Okay. If you look at this, higher high, lower low, lower 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 high. Don't know yet. So, wouldn't want to be touching this chart. It's a better play to be late than be early. Even if you're late upon, you know, you don't enter on a higher low, you're late and you wait for the break to the new higher highs, call it 10 bucks, there is still $30 more upside potential. Or to be conservative, oh, this is can't get it. Okay, let's see. To be conservative, let's say we go to the low. Even if you enter at $10, say you're really late, you know, it broke the highs and you wanted to wait for the break of 10 to confirm. It broke the 10 and then you enter at 10.36 kind of thing. There's a key resistance here, so you can never find a perfect entry. Even if you enter at 12.61, the break of that, there is still a 50% move to that 0.382. 0.5 would almost line up 23. Yeah, 0.5 would line up with this zone. So yeah, lots of upside, even if you were late. Okay, next, plus. Now this one has been gaining a lot of momentum in the sense of chatter, not so much the sense of movement, but we are seeing decent movement come in. However, last week's volume has me concerned. Highest bear volume since 2016. June 2016. Highest bear volume. Be aware if you are playing this chart. GP hold on the daily looks really nice. GP hold. And we are about to break this previous key resistance. So on the daily, there's a play. All right, let's do a couple more. I'm gonna go check on the dog. What's interesting? Let's do DKNG. And finish off on the same one, score. All right, DKNG, lack of follow through today, low bear volume, earnings tomorrow will dictate the direction. Well, that was easy. Next, score. Nice bounce, nice follow through, touch the 88, then reject it from there. And now we are looking, there's a little bit of decent bear volume. Potentially, this could be a lower high, and we are going to find that lower low. Now, ultimately, we got our decent planned entry. It just came a lot sooner than expected. So now this could actually be in play. The GP, which lines up with previous key trend line, resistance, resistance, support. Now we could be looking at a back test right here. So we got our first decent entry in, or ideal entry, but based on the chart, if there is further downside, we'll be looking at somewhere around there. Okay, and that's it for today. Don't forget to give a thumbs up. If you're looking to build that first pot of gold and enjoy the content that we provide, please consider subscribing to our channel where we provide new videos daily. Also, check out our website at totalcontroltraders.com. We offer 7-day free trial to our chatting platform where trading ideas are shared and charts are reviewed live. Hope you guys stay safe and be in control. Thanks for watching. I will see you guys in the next video.